Hey everyone, Jack Burdey, Wealth Associate and Associate Portfolio Manager on the Schaefer Financial Team here at CG. I want to make this video about what people mean when they reference the market or the markets as a whole. Let's jump in. Starting at the most basic level, when people refer to the market, they're almost always referring to the stock market. The stock market is basically an all-encompassing term that represents all the stocks that are publicly traded across all exchanges, either globally or within a certain country. A stock index or stock indices are essentially a segment of the overall stock market. Within every major country that has a stock exchange, there are typically one or a few major stock indices that are more widely followed and quoted than the overall stock market. For example, according to the accompanying, in 2022, there was 3,524 publicly listed companies in Canada. However, when people refer to the market or the Canadian market, they're typically referring to the TSX Composite, which is a stock index that follows 217 of the largest and most liquid public companies in Canada. So why do people look at the TSX Composite instead? Well, due to the largest companies being disproportionately bigger than the size of all the smaller companies, that even though the TSX Composite only has 217 constituents, it actually represents about 95% of the total Canadian equities market and serves as the primary gauge for companies that are listed on the TSX. In the US, the most commonly quoted stock market index is the S&P 500, which represents roughly the 500 largest and most liquid United States listed companies. Some of the other common ones are the Dow Jones Industrial Average, which has about 30 stocks, and the NASDAQ, which is the NASDAQ Composite, which is comprised of about 2,600 companies. Again, according to the accompanying, in 2022, there was roughly 4,642 total US listed companies. Stock indices are commonly market cap weighted, which essentially just means that the larger the company is, according to its market capitalization, which just represents the total value of the company, the larger proportional weight it gets within the stock index. The bigger the company, the more weight it has when representing the companies in the basket. For example, NVIDIA is one of the largest listed US companies and one of the largest companies in the world, with a market cap of just under $3.5 trillion. Therefore, its representation and its weighting in the S&P 500 is greater than the 0.2% if all the companies were roughly equally weighted. And it actually represents about 6.3% of the total weighting in the S&P 500. That information was from slickcharts.com. In the super unrealistic scenario where all the other companies in the S&P 500 stay flat on the day and NVIDIA shares increase 10% that particular day, then the S&P 500 return would be 6.3%, the weighting of NVIDIA, times 10%, which would be 0.63%. That would be what the S&P 500 return for that day was. The market, the S&P 500, the return is just a weighted average return of the individual companies on any particular trading day. So to sum it up, when people refer to the market, they're typically referring to a commonly quoted stock index. The reason why is because it's much easier to refer to a basket of less stocks that do a good job at representing the overall stock market than it is to keep track of every single stock and all their performance. I hope this provided some clarity on reference to markets and stock markets as a whole. If you have any questions, please reach out to Chris or myself or anybody on the team and we'll be happy to help. Take care.